Starting with the gold prices, and they're holding above $1,300 per ounce, supported by buying in Asia and Europe. The ongoing geopolitical crisis in Ukraine is weighing on investors who are worried about the impact of the conflict in the regions. This has pulled European markets lower, pushing the investors to the safe haven of gold. Not too much of gain, but very flat trades continuing there. The energy space has continued to see further declines, with Brent now trading at a 13-month lows below 103 a barrel. The crude prices have been witnessing downward pressure on the back of supply glut in the Atlantic basin. The output from OPEC also has risen to 5-month highs, as increased production from Saudi Arabia and Libya have more than offset declines in Iraq, Iran and Nigeria. Let's bring on board then our experts this evening. Society Generals Mark Keenan, SSJ Finance and Securities, and we also are joined by BSPL India's Vijay Bhambani. Also joining us on the show is Priyank Upadhyay. Vijay, hi, you go first. And what's your sense really, first of all, coming in for the energy space? Very sharp declines yet again in last 24 hours. Would you see further declines?
Manisha, I've been bearish on crude and natural gas both for at least 6 to 7 weeks now, ever since the ISI has raided Iraq. I think energy prices are showing signs of very significant weakness, and I need to watch the 5,935 or 40 levels, give or take a few rupees here and there, on prompt month futures on the MCX WTI crude. If at all I see prices decline below this and trade sustainably with higher volumes and open interest expansion, of which there's a fair probability, I think crude prices are likely to sink below the 5,880 levels also. I'm bearish on crude, and where natural gas is concerned, yesterday I talked about how 248 seemed to be a glass ceiling for the bulls to overcome. That's not happening. On the contrary, natural gas prompt month futures are now trading at 241 odd levels. So if you see a decline below 238, I think the bulls are likely to be pushed into a corner against the ropes and are likely to witness extreme amounts of discomfort. I'm seeking short selling opportunities on both these counters.
Mark, your sense on crude prices, are you bearish as well on the prices there? Do you see further declines, and if so, then to what extent?
Yes, it's an unusual situation on the surface of things with the level of geopolitical risk that we're seeing across the region. One would have expected crude oil prices to be higher than they are now, or indeed not to have seen the falls that we've seen. In short, the prices come off because very simply supply output hasn't actually been disrupted. With respect to Iraq, all of the production and the output from the country is generally concentrated in the south of the country, and in the north, where we have had US military strikes. The oil produced in that region, in the Kurdish region, is not entirely available to international markets, and the pipeline that was taking some of that crude out through into Turkey was destroyed earlier this year. So really, we haven't seen anything any supply disruption to speak of, which is why prices have drifted lower. The recent move lower has been, over the last few days, has been driven by the latest IEA report, generally revising down their demand forecasts for crude very slightly for this year. And notwithstanding that, we've had inventories within Europe and Asia on the crude side pretty high, lackluster physical demand, and these have collectively been depressing the market from the supply-demand side of things.
Fair point. Priyank, how would you look at the energy space? Selling crude, buying natural gas, is that your way too?
Overall, the crude oil prices are sustaining below the $100 on WTI, and looks likely it could edge lower towards 95 to 94 in short term. On domestic as well, 6100 is a good resistance zones. Unless and until prices don't close above 6100, a trend remains on the downside, and we could expect levels of around 5850 to 5800 in short to medium term. So from the intraday perspective also, it's like a sell-on rallies. Coming to natural gas prices are facing stiff resistance around 250 levels. Again, 238 would be the level to see. If it breaks below and close below 238, we could see another 5 to 6 rupees sell-off towards 232 to 230 levels.
Let's talk about the gold prices, and they just about are holding 1300, not doing much. Mark, what's your sense? It's losing its luster as a safe haven bet for investors.
Yes. I think it's questionable as to whether it actually ever had it in the first place. There's perhaps a curious focus on gold right now. It's understandable considering how much gold fell last year. It was a significant move down. But of late, and certainly over the last 4 months or so, gold has actually been within an extremely tight range, less than $100 range. And if you go back and rewind and you look at the spectrum of geopolitical events and risks that we've had from the Ukraine right through to the situation in Iraq, gold really hasn't responded at all. In fact, any meaningful rallies tend to be sold quite quickly. And in the context of the broader macroeconomic framework, that of rising rates in the US, that is very bearish for gold, and it's quite difficult to justify a long position or a fresh long position in gold with that framework in place. So we see gold lower for the rest of this year, not too much more, but down to around 1,250. I think we've been down to about 1,248 this year, so about another $50-$60 from current levels.
Priyank, what's your sense? 1250 is what Mark is saying for the international markets. Where do you see a support coming in for the Indian prices?
As well as Indian markets goes, 28,500 to 28,300 would be the very immediate supports. I feel as long as 29,000, 29,300 is providing a strong resistance, we see gradually a move lower towards 28,500 to 28,200 in short term.
Vijay, between gold and silver, how would you want to treat the precious metal space?
Manisha, I remain bearish on both. Because if I'm expecting crude oil prices to decline, which I do think will happen, I think inflationary fears will recede and safe haven buying will also be fairly tepid, if at all. I would maintain my view that 28,250 to 28,350 is a support level to watch out for, and it's likely to be tested on gold. Where silver is concerned, I think 43,250 levels need watching, which do have a fair probability of being breached. So I'm not keen on buying both gold and silver. As a matter of fact, if at all there is a sudden surge upwards, I would seek short selling opportunities on both counters.
But on these lower sides, then, Mark, would you see gold buying picking up in India as we head towards the festival season here?
Historically, that's always a very strong dynamic, and we do always see an element of that. Generally, in the month of November, you get a very concentrated period of buying. So I do expect an upside bias to that, and I think that will tend to overlap probably with much more clarity on the tapering and the guidelines from the Federal Reserve Chairman in the U.S., and that may sort of interlace with a much more crucial or a much earlier potential rising rate profile that will provide, if anything, a selling opportunity from the Indian strength with a view of prices trending lower thereafter.
Mark, also the base metal prices are still trading at a multi-month highs, even though we've seen some profit taking coming in today. What's your view on the sector?
Well, I think we have to be a little bit more granular within the sector. If we take the 5 main metals, we have slightly different profiles and dynamic for each of them. Copper's the main exception. We're pretty bearish on copper prices from here for the rest of the year. We see that down to around 6,500 towards the end of the year, generally on rising mine production, and also copper being very vulnerable to risks in China, specifically risks surrounding collateralized loan structures that we've seen growing in greater magnitude of late, and any hint of regulatory tightening, a clampdown in the shadow banking sector, tends to manifest itself in a risk that some of these structures may unwind in some capacity, or at the very least reduce the demand for them going forward. So copper is vulnerable to that. The rest of the complex, some of the metals are very bullishly positioned in terms of their underlying supply and demand dynamics. Lead is one of them. Zinc is one of them. Zinc has done quite a lot recently, so we may get a little bit of a pullback from the levels that we've reached. And then, of course, nickel with the ban on Indonesian ore exports going to remain in place, in our view, for some time going forward, and that will flip the market into a deficit for next year, and we see prices in nickel trending higher as the supply-demand deficit becomes more apparent going forward.
Fair point that, Mark. We will keep an eye on all of those fundamentals, and thank you so much for joining us with all of those commentaries on the commodities. Let's talk about the agro space, and let's start with sugar, where Allahabad High Court today has ordered the sugar mills in Uttar Pradesh to start liquidating their sugar stocks for clearing cane arrears. The mills have been directed to liquidate 5% of their current stock every week for the next 3 weeks, while fixing September 3rd for subsequent case hearing. The court has fixed rupees 3,100 quintal as the floor price for the sale. 30% of the realized amount would go towards clearing the cane dues, while remaining 70% would be decided later by the court. The High Court also has restrained any coercive action by the state government against mills. Vijay, what's your sense on the prices though?
Manisha, today sugar prices are down in the prompt month futures to the extent of 0.5%. But this move is unlikely to be taken very well by the financial futures markets. I think 2,900, give or take 25 rupees here and there, will now act as a hard floor for sugar prices. I'm afraid I would agree with Mr. Verma. This does not augur well for the next sugar season, and the financial futures market will start to read into that. I would not really be surprised to see a certain amount of bullishness coming back into sugar futures, but it would not really go out of hand because it's a politically sensitive commodity. Now, what will happen is that the waters have been muddied, and traders on the commodity exchanges might shirk away from sugar futures. It's already started happening. Volumes have started coming down over the last 2 trading weeks.
All right, not a sweet spot to be in. Priyank, what's your sense on the edible oil space, though? Because we are looking at a record harvest when it comes to corn and soybean into the U.S. markets. Do you see that impacting prices in India?
Soybean prices overall, I feel, could edge lower again. And given the harvest, we feel it should be a sell-on rallies market.
All right, so not a buying proposition when it comes to the agriculture space. Priyank, we will let you go at that. Thank you so much for joining us with your strategies.